So let's welcome in another. Robert Smith. He is the founder, chairman, and CEO of Vista Equity Partners. He is with me here at the CAIS conference in Beverly Hills, and we're so happy to have you. Thanks for being here.
Good to see you, Scott. Thanks for inviting me.
All right, so I mentioned all these people who are opining on this topic. Paul Tudor Jones was on CNBC just last week, said it feels exactly like 1999. Ken Griffin, quote, "There are obvious echoes of the dot-com era," and we even heard from Jamie Dimon and David Solomon today, similar things from what we've been hearing from some of the most regarded people on Wall Street. So what do you think? Are we in a bubble?
I think, again, it's complex. It's a complex ecosystem, and you have to look at different parts of that ecosystem to actually understand how this is all going to play out. If you look at the early phases of almost any new technology as it's introduced into the marketplace, you just see the hardware vendors, then the scalers, in this case hyperscalers, start to really catch fire. Now we have hardware vendors becoming hyperscalers, but typically what happens is there will be a third wave where the application users, those who are actually using this technology to empower their businesses to become more profitable or accelerate their growth, will capture the long-term economic value or economic rent in these marketplaces. So to me, when I look at it, certain parts you may argue of the marketplace are very exaggerated in some respects. Other parts, quite frankly, haven't actually felt and had the realization yet of the promise that AI is going to deliver. From our perspective in enterprise software, AI is going to empower enterprise software in ways, if you manage those businesses well, that will create growth and profitability, heretofore have never been seen. So those sort of dynamics haven't played out in the marketplace, and everyone's playing that things are a little more obvious and tangible because it's complex, it's hard work, it's not trivial. But as it manifests, I think we're going to see a massive opportunity in enterprise software, agentic enterprise software. So I'm excited about that.
The biggest question in your wheelhouse of software isn't is there a bubble necessarily, it's is AI going to kill software? I mean, you've heard that. I know you have because everybody's been talking about it for the better part of the last couple of years as all of this has exploded on the scene. Now, the IGV, which encompasses enterprise software companies in the market, has actually outpaced the S&P 500. Multiples have come down. How do you see that question?
What will likely happen is AI is going to enable enterprise software to eat services. If you think about it, what this will do is create a whole class of agentic workers. Work that will actually happen at a higher frequency, at a lower cost, with higher efficiency, once it's installed and embedded with high precision in the enterprise. That's the part that has to be done well. You hear reports about, 93% precision. That's not enough for the enterprise. You actually have to have a higher level of precision in the enterprise. That's kind of point number one. Point number two, it's critically important for people to understand the vast majority of enterprise data and workflows actually isn't part of these foundational models. Okay, the foundational models have captured all of our consumer data, and that's pretty obvious. But in the enterprise, I read a report a couple weeks ago, only 1%. We're seeing less than 1% in our portfolio of our data actually a part of these foundational models. So ultimately, if you've controlled and had the sovereignty and dominion of workflows and data sets, you were able to agentify your systems and able to enable your customers to actually become more profitable, grow more effectively, and operate their businesses more efficiently. That's that last wave that I think is going to create the massive economic opportunity for investing.
There will be some disruption, though, for certain types of software companies.
Sure.
I mean, the debate feels like it's really centered around SaaS, whether you're going to need that in this new era of agentic AI.
The way I like to characterize it, enterprise software is going to end up in three categories: agentic, rule of 70 versus rule of 40, and no right to exist. So if you actually don't have sovereignty and dominion around your workflows and data sets, you won't have a right to exist in that new agentic world. But if you've managed that well, you actually have not only a right to exist, but a right to excel in that marketplace. You'll be able to deliver products, services, solutions, agentic workforces that will be able to do things that human beings won't be able to do at the pace and at the rate that agentic engines will be able to accomplish.
Okay, so you just mentioned the rule of 70.
Right.
Whereas 70 is the new 40.
Right.
Because the traditional way that people like you evaluated software companies was on the so-called rule of 40. For those who don't know, it's the software companies' combined revenue growth rate and profit margin should be 40% or higher. So you're finding yourself now having to reevaluate the way you look at software companies at that much higher level?
There's two ways. There's a reevaluation, and then there's a re-underwriting of what you can accomplish. We are now actually seeing the work that we've been doing now for over 2 years of driving agentic or GenAI enabled product development, go-to-market, the customer support services that are now creating massive operational leverage in the businesses that we're now starting to see. So companies that were operating at 40% EBITDA margins can now operate at 50% EBITDA margins or 60% EBITDA margins. And then it's a function of the agentic solutions actually making a more effective go-to-market strategy to accelerate the growth. That's what we're now seeing. We've now been at this for over 2 years. We've built out the systems across all of our portfolio companies. Everyone is using some form of code development, GenAI-enabled code development, some form of customer support enablement, some form of go-to-market, back office operations. So think about bringing efficiency across an existing portfolio company to make it much more profitable, and then agentic solutions that will work on the outbound motions for sales and sales enablement that actually accelerate the growth. That's the dynamic we're now starting to experience.
So am I right to think of it almost as generative AI is kind of the fun part of AI? It's changed the way we search, and it's going to impact in many different things that we do, but agentic AI is the game changer in terms of productivity, efficiency, company growing its revenues, its EBITDA, and all the things that ultimately will matter more for investors.
I would agree that agentic will enable that to happen. We've now gotten a number of our companies into that state where they're now delivering agentic solutions. When we were first using enterprise software capabilities to go from on-premise to cloud, we were seeing about 2.5 times economic rent pickup. The ability to capture that much more revenue from existing customers because we could deliver a more efficient system for us and a more efficient cost-adjusted system for them and capture that pickup. We're seeing agentic solutions at an order of magnitude greater. So the movement from a cloud-based SaaS, if you want to think about it that way, to an agentic has actually a higher inflection point. It's much more difficult to do. You have to build out capabilities to do that at scale, but the rewards are going to be exponential relative to what we saw in the first conversion from on-prem to cloud.
How should we think about exits in what you do? I mean, we've been talking about potential exits in the private equity world for a while, whether the marketplace had been opening up. If software multiples are not what they were, if you were, say, selling at 25 times EBITDA, if you're now selling for, say, 15 times, for example, is that actually taking place? Are you having to maybe rethink what the end game is going to look like?
We're not seeing that much compression, shall we say, in the multiples, to understand it as an example. But if you're expanding your EBITDA and you're actually able to inflect your EBITDA, again, rule of 40 to rule of 70 by reducing your costs sustainably, introducing operational leverage in those businesses, lower costs of customer support, lower costs of your operations, lower costs of your product development, you'll expand your way in terms of EBITDA values so that even if there's a modest multiple compression, which we're not seeing much of in many places, you'll actually be able to continue to return capital. We've been very fortunate in consistently returning capital to our investors, and this sort of inflection dynamic we think will actually accelerate that opportunity.
Orlando Bravo was on our network last week from Thoma Bravo, and they do a lot of, they're an enterprise software as well. He suggested that there was a bubble in valuations, especially in the private market. What do you think about that?
You see it in different places. Like all things in markets, you and I talk about this, markets all have different equilibrium states. Certain private markets you'll see inflated, you can call it a bubble. Certain private markets haven't actually understood or recognized the opportunity that's actually occurring in those marketplaces. So there's truth to that, and there's also truth to the fact certain markets and the private markets are actually undervalued relative to the potential of those businesses.
When you look at the markets overall, I mean, where do you think we are in the cycle? People are trying to guess, are we late innings in in the expansion that we've seen? I mean, earnings are still good. I would assume software earnings are still going to be good. The Fed's cutting interest rates. If you put all that together against a backdrop of what feels like it's another bumpy road in the trade picture with China, what does that mean for how you see it?
The way, again, we are not stock pickers. What we do is we buy businesses and bring specific sets of value add capabilities and enablement capabilities. If you do that consistently, you'll be able to grow earnings. I fully expect earnings to continue to grow at our businesses and other businesses like ours that are now introducing GenAI enabled systems to reduce cost. Think about that. That dynamic will actually create a massive opportunity for investors to take advantage of. Certain of those elements haven't been realized quite yet in terms of investors recognizing it. Part of our job is to build those systems, build those capabilities, so when we're underwriting new businesses, say we can inflect that business by implementing a GenAI enabled system or an agentic solution. And with our partners in the marketplace, deliver to them the capabilities to drive that business forward at a much more rapid rate. That's how we're thinking about it.
When you think about the obvious benefits of agentic AI and the companies that you own and the ones you're looking at, what about the dislocation of jobs? How do you see that developing if agentic AI is going to do all of these amazing things for people and businesses? Isn't there going to be a dark side to that story?
There is, and the way I think about it, every knowledge worker's work will be affected. Now, to what extent is going to be a function of where they are in the value chain and what they are actually doing. There are about 1 billion knowledge workers on this planet, making up $40+ trillion of, call it, economic activity. Every one of those knowledge workers, certain parts of their business and the work that they do can be agentic. Knowledge workers will go into a system, they pull information out of that system, they process it and put it back in the system or another person. Well, certain parts of that workflow, an agent can be more effective at extracting the information. It might be faster at coming forward with some ideas of what the inferences are from that extraction and what conclusions can be drawn and either put back in that system or acted upon by the individual. Those are the dynamics that as you actually agentify software companies, you actually have to discern all of those pieces, which pieces can be agentic, which pieces are left with, I'll call it an orchestrator, which may be human or maybe agent or maybe an agent. Those are all the dynamics that are really in play today that are going to change the way that we do work. Some jobs you will no longer need. Some jobs will be enhanced by what these agents will do. And all of them are going to be a little bit different, but absolutely every single knowledge worker on the planet will be affected by this new technology.
I've heard some people suggest that the argument itself is a little overblown, that they talk about that people will be redeployed rather than replaced. That you're not necessarily going to have massive waves of job loss. People would just be redeployed to do different things while still utilizing these the powerful nature of what agentic AI and AI in general is going to bring to us?
It all depends on the policy that's in place. There may be certain governments that say we are not going to have, layoffs. There may be certain governments that say let the free market bear what it will be.
You mean because it wouldn't be politically tenable?
Yeah, it may be, right? And so certain environments where they actually have a high number of knowledge workers and those knowledge workers actually brought, those communities or those countries into a different standard of living, they will be affected. And they may say, you will not lay these people off, you have to redeploy them, retrain them. There are going to be certain companies that have those policy approaches as well. So I think, look, we're in the early stages of how agentic solutions are going to impact broad-based companies and governments, and it'll be interesting to see how this all plays out. And I think there's going to be a wide variance. Some are going to let a free market take it. They don't need the people, and those people have to go find it on their own. I think others are going to say we're going to retrain them, redeploy them, and others I think are going to have certain edicts that say you can take the profitability from this, but you're going to have to drive that profitability either to your stakeholders, but you cannot let go of the people. So I think there's going to be a mixed bag across the board.
I think we recently celebrated the 30th anniversary of
25th.
25th. Okay, I don't want to rush you 5 more years, but the 25th. When you look back from the beginning and then at certain stages of where Vista has been, given that you've always been in enterprise software has been your expertise, Are you most excited today relative to where you've been in the past because of what the power of AI has the potential to do for software?
I am more excited now. When we actually, again, when we started, the early days, software companies were all on premise. And then as we built our factories to make them cloud and cloud enabled, you got about a two and a half times pickup of economic opportunity. The agentic solutions that we are now producing and building and installing, we're seeing 10 to 20x type returns of economic activity or economic potential that we can enable our customers to actually realize. So it has a massive implication, but you have to get it right. You have to actually configure these, you have to enable them properly to deliver that value to your customers. Again, that is non-trivial. So you actually have to have the right systems and process and people and procedures to do that across a vast number of companies, which is what we're doing.
All right, I appreciate you so very much being with us. I'm going to be doing a panel with you in a little bit, a few hours from now, so we'll restart the conversation about the power of agentic AI. Robert Smith joining us exclusively here from the CAIS conference. We'll see you soon.